The first thing I wish I had done differently is to stop strategy hopping and stop holy grail chasing. Now, basically, the holy grail or strategy hopping is basically you go from one strategy, which might be something like support and resistance, and then you go to another strategy, you go to another strategy, SMC, ICT, all of these different strategies, and you basically get in the loop of just going to different strategies every single week, every single month, or in my case, it was pretty much every single week. Now, the reason this isn't good and the reason it can actually hinder your journey is because you're not actually giving the time for one strategy to play out. You're just constantly, maybe taking a couple of losses and then defining that whole strategy based on like a week's worth of trades. Whereas you need to basically look at like a whole year's worth of price action of that strategy to, come up with a conclusion of, is that strategy even good? Does that suit you? Things like that. So don't pretty much make a judgment based on a couple of weeks worth of, using that strategy. Go really deep into that strategy, find out losing streaks, winning streaks, win rates, all the like key stats and analytics of that strategy, and only then come to a judgment. Mistake two I made was comparing myself to others. Now, what this did and why this was very detrimental is because I used to be on social media a lot. So I used to see not only different strategies and people using it and just showing wins. So that led me to strategy hopping, which was the first point. But it also led to me comparing myself to others, whereas other people were like way further up in their journey. And I was literally just starting out. But seeing them having it all figured out, or at least it looked like that, made me feel like I'm doing something wrong, which made me strategy hop even more, which made me, just like lie there or sit there in my thoughts thinking like, what am I going to do now? Whereas I could have just used that same energy, turned it into positive energy, and just, put more work into backtesting, forward testing, and mastering one simple strategy. Just cut off social media, and if you can't cut that, if you can't cut off social media, then literally just find your triggers that lead to you, having bad and negative thoughts, and just block those people out of your Instagram. Okay, if you feel like seeing their posts is gonna give you negative emotions, just block them out and only keep people or follow people that put you in a nice or positive state of mind rather than a negative one. The final mistake I made in my trading journey is not accepting the risk. Now, Mark Douglas says this in Trading in the Zone, which is a book, if you don't know. It's like probably the best trading psychology book out there, or at least the most well known. And Mark Douglas basically says that just because you take a trade doesn't mean you actually accept the risk. And it's only hitting me now, to be fair, because I used to just take the trade, but in my head, I was always expecting a win. He says that treat it like a slot machine, treat it like like if you gamble, right? If you put a coin in a slot machine, then, and if you lose, you don't think of yourself as a loser, right? Whereas in trading, when you take a loss, you automatically, tie your self-worth with being a loser. So he says just treat it like a slot machine and accept the losses. Also think in probabilities as well. These kind of things I wasn't really doing because I was just focused on finding the best strategy and then literally having a 100% win rate strategy. And every time I took a loss, I would go in the same cycle of strategy hopping, comparing myself to others, all of these negative things, which, as you can see, they're not the actions that are necessary to actually make progress. Now what I'm doing is literally following Mark Douglas's advice, executing a sample size of trades, but I've literally got a data-backed strategy which would have passed me a prop firm challenge last month if I had executed my plan. I didn't execute my plan, hence why I didn't pass the prop firm. So it just shows that executing is the main thing. And getting back to the point actually, which was accepting a loss. Every strategy has losses, and I've said this many times on the channel. And the reason I keep repeating is because if anyone's out there who I'm talking to, I just want you to understand that losses are going to happen, and I'm going to literally do my best to show you all my losses. And there will be times on this channel where I go on like a 7-8 losing streak, and I'm ready for that because I know that my strategy, like that can happen in my strategy. So I'm ready to show that and just show how I'm going to bounce back from it as well. Because I know if I just stick to the plans, trust my strategy, which I've backtested over 3 years, going on 4 now, and it's giving me a positive expectancy, then why would I change anything? Like, why would I, if it isn't broke, don't fix it. One of those things. So that's literally the 3 mistakes I wish I avoided. And I'm doing my best to actually not make them anymore. And just get better as a person, more consistent, get better as a trader, and actually start becoming consistently profitable rather than just having a couple of profitable months. Actually have longevity in this in the trading business. So that's all for today. Hope you got some value out of it. Happy trading and stay safe.